Interest rates are set to hit an inflation target. So we set interest rates at the right level they need to hit the 2% inflation target over the medium term. At the moment, we think that the 0.1% is what's needed to do that. A secondary objective of interest rates is to support the UK economy. So the point to make is that the government's bills will have to be repaid either through fiscal policy, so either reduce spending or increase taxes, or a combination of the two most likely. So government will need to raise money to repay its capital and pay its interest charges on its debt. So in a way, having interest rates lower actually makes the repayment of the interest on that debt cheaper than it would be if interest rates were higher.
Ultimately, there's going to be tax all the way across the board. I had a discussion with somebody the other day about whether corporation tax is the right way to do that, bearing in mind that potentially business profits are going to be hit, and therefore perhaps corporation tax isn't the way they'll go on that. But I think undoubtedly income tax, I do expect another sort of hit on pensions, and I wouldn't necessarily rule out a wealth tax. Because let's be honest, what's happening here is businesses will be taking the money which they will need. It will work its way through the system as it always does, and will sit with the wealthier people.